Welcome to the Natural Resources Forum and Spark London Stock Exchange Issuer Services platform. My name is Gareth Baker. I'm a partner at Gowling WLG, and I am also the co-sector leader of our global energy sector team. Today, I'm delighted to present a discussion on decarbonising the energy sector with hydrogen, where I'm joined by three speakers. Tom Bruton, who is the CEO of TCRK Energy, Graham Cooley, who is the CEO of ITM Power, and Richard Hulf, who is the Managing Director of HydrogenOne Capital. Now, before we jump into the speakers, there's been an awful lot of interest in the hydrogen market, which is perfectly understandable. There is a huge opportunity and it seems a very rapacious demand. But it's worthwhile for those coming at the sector for the first time, just reminding the group or educating the group as to the different types of hydrogen that exist, as some of the colours that I will shortly mention may well come up in the discussion. So green hydrogen is the process of producing hydrogen through electrolysis of water, which is split into hydrogen and oxygen. Blue hydrogen uses natural gas stream reforming, where there is separation into hydrogen and CO2, and then that CO2 is subsequently captured and stored. Grey hydrogen is a similar process to blue. However, once that process is done, the CO2 is not captured, it is instead released. And turquoise hydrogen is where natural gas is broken down using methane pyrolysis into hydrogen and solid carbon. So, following that run through of several colours of the rainbow, so now I'd like to move on to our first speaker, which is Tom. Tom is the CEO of TCRK Energy, and Tom is going to talk to us about blue hydrogen and its role in the transition. Over to you, Tom.
Yeah, hi. Our interest in blue hydrogen stems from our starting point. We're involved in the gas sector, mainly in Africa, and Mozambique principally, with a couple of places in the Middle East. We, in 2017, set about looking at what next, what if you were developing your gas resources, what was the direction of the industry? So in talking to regulators and buyers around the world, it was clear that there was a shift in the energy matrix, and it was looking more and more likely that that shift was towards hydrogen. And look, that's been proven over the last 3 or 4 years. There's been a huge move towards hydrogen and being hydrogen ready. If that was the case, how were we going to position in the market? If our first gas is coming on stream in 2026, 2027, our first long-term contracts will finish in 2035. If the market has moved to hydrogen at that stage and we don't have a strategy, how do we deal with this? So we start looking at blue hydrogen at that point. So in looking at blue hydrogen, you have to look at the ability to produce. Blue hydrogen under steam methane reforming. This is not new technology. It's been around for about 50 years. What we're looking at is an enhanced form of steam methane reforming, which allows us to capture carbon more efficiently, much earlier in the process, and actually to end up with a usable carbon rather than carbon we're just going to sink into the ground, back into the ground. The next issue is developing shipping and transportation solutions, because in hydrogen today these solutions don't exist. So over the last 2 or 3 years we've been designing ships that will transport the hydrogen and deliver the hydrogen to the markets that require it. The first two ships that we designed are going to the classification societies at the moment for approval and principle before they will go to the shipyards. And then it's looking at key markets. The two key markets that we're looking at are the UK and South Korea. The UK has positioned blue hydrogen as part of its energy mix going forward. And they've announced in the UK several SMR plants. We would slightly disagree with the SMR plants being in the UK because of the baseline economics. That's a decision for the UK government. The second market we're focused on is South Korea. South Korea's hydrogen economy pathway is probably one of the that's better defined than most governments. They have a very clear pathway to where they're trying to get, and it's focused around fuel cell electric vehicles. And they have a plan to go from where they are today, which is roughly 200 hydrogen charging stations, to by 2040 to having 1,500 charging stations. And to do that, they will need 5 million tons of hydrogen per year. And of that 5 million tons, roughly 50% will be imported. And blue is always part of their mix. So yes, they're looking at green, and yes, they're looking at turquoise, gray, but blue as one of the elements of that energy mix will always be there. So that's our starting point. But a lot of the technology that we're developing is agnostic about the color of the hydrogen itself, because it still needs to be shipped, it still needs to be distributed. And that's where our focus is.
Great. Thank you very much. Tom, I suspect that there's some, well, certainly I've got some questions arising from that summary, but I was proposing next that we talk to Graham. And Graham, perhaps, well, first of all, to introduce you, Graham is the CEO of ITM Power. And Graham, ITM Power is a name that has come up very often in the hydrogen story, getting a lot of coverage. It would be interesting if you could talk a little bit about ITM Power, its positioning, how it's developed, and to get your perspectives on the hydrogen market going forward.
Yeah, thank you. Thanks very much for having me. So I'm Graham Cooley. I'm the CEO of ITM Power. I've been the CEO now for 12 years. I have a background in the power industry. So I was development manager at National Power and then International Power, and particularly concentrating on energy storage. So I've worked in supercapacitors, batteries, flow cells, fuel cells, and hydrogen. So a 35-year journey for me personally. And at ITM has been designing, researching, and now building and operating electrolysis equipment for the last 20 years. So it's not new industry for us. We moved in first Monday of this year to the world's largest electrolyzer factory, which has a capacity of 1,000 megawatts, 1 gigawatt per annum. We have a backlog of projects now of 124 million. We tendered over the last 12 months 435 million pounds worth of capital equipment. In October, we raised 172 million on the London stock market. That was 2.5 times oversubscribed. And actually, we had a phenomenal response from the capital markets. And I would say that the capital markets now have a really deep understanding of hydrogen and its use in the energy transition. We announced a couple of weeks ago the sale of the world's largest PEM electrolyzer, which is going into the Leuna chemical park in Germany, 24 megawatt machine. We've been working with Ørsted and Phillips 66 in the Humberside. We're doing a front-end engineering design for 100 megawatt. electrolyzer, and was delighted only a few days ago now to see the announcement from Shell that they're expanding our 10 megawatt project, which is at the Rhineland refinery, to 100 megawatts in size. So, and I'd point out that 10 megawatts at the Rhineland refinery makes just 1% of the hydrogen that they use at that refinery. So look, in terms of the markets for hydrogen and what the entry markets are and the way that ITM views this, we formed a partnership 18 months ago now with Linde. So Linde are the world's largest specialty gases company and the world's largest EPC contractor in the area of grey hydrogen. And we formed a 50-50 joint venture with them, and we bid with them into the industry that is replacing grey hydrogen with green hydrogen. So refineries, ammonia, methanol, metals treatment, and so on. And as I say, working very closely with them, we bid £435 million worth of equipment. That number is a number we put out 4 times a year. And it is actually a very good measure of activity in the market. These aren't press releases; they are international commercial tenders, and we bid against them turnkey fixed price quotations, which means that there's been a lot of engineering work involved in specifying those projects. With the platform we used for the Shell project is a 2 megawatt module. We are now moving to 5 megawatt modules. We work with Linde on pre-engineering 20 megawatt trains, and we put those 20 megawatt trains together to bid full turnkey plant at the 100 megawatt level. And we are bidding now absolutely on a regular basis 100 megawatts in scale. So if you go back, the periodicity actually is about 2.5 years. If you go back 2.5 years, everything we were bidding was at the 10 megawatt level. You go a couple of years before that, it was at the 1 megawatt level. And now we're seeing press releases about gigawatt scale electrolysis plant. So we have a modular technology. Modules are at 5 megawatt level. They're 2 orders of magnitude larger than the modules that are used in a battery plant for energy storage. Of course, they're somewhere around 40 kilowatts in size. I mean, an amazing time for green hydrogen right now. You'll have seen the announcement on the 8th of July 2020 from the EU. And that announcement was that they're backing green hydrogen. 15% of their €1 trillion green recovery, so 150 billion, is for green hydrogen. 100 billion, that's 10 billion a year for 10 years, for CFDs, to bridge the gap between green hydrogen and grey hydrogen. And today, in Europe, we use 400 terawatt hours of grey hydrogen. Mainly ammonia refineries, production of methanol, and some metals treatment. So just a final point, refineries look like the entry market right now. The reason that refineries are the entry market is because all refineries in Europe are included in the Renewable Energy Directive. And there's an obligation on refineries to make 14% of their product renewably over the next decade. So if you look at that market, it's a huge market. As I said, the 10 megawatts at the Rhineland refinery is 1% of the hydrogen. So that refinery needs a gigawatt of electrolysis to decarbonize the hydrogen. And that's just one refinery of one oil and gas company.
Great. Well, that just really does illustrate the size of the opportunity that's out there. And as you say, it's a fantastic time for everyone involved in green hydrogen, as well as the broader market. Our final slot is with Richard Hulf. Richard is the co-founder of HydrogenOne. HydrogenOne is a fund that will be investing in the hydrogen market, many different aspects of it. Richard, it would be good to get your perspective, the investor's perspective, on where the opportunities are for investment, and to give a sense of where those are, both in the short, medium, and longer term.
Yeah, thanks. Thanks for that introduction. Yeah, my name is Richard Hulf. I'm the co-founder of HydrogenOne Capital with my partner JJ Trainer. We set this business up last year as a company that will launch funds now and over the next few years that will invest exclusively into the hydrogen space, and that will be listed companies like Graham's. There'll be private companies as well. There are as many of those as there are listed companies, in fact more. We will invest into electrolyzer makers, fuel cell manufacturers, the sort of the core builders of the sector. And as the sector builds out into transportation, into storage, and into a vast number of applications. The reason that this sector has really kicked off, and if you look at the sort of hockey stick performance of a lot of the listed shares over the last few years that have been around a long time, they know what they're doing. They've been at this for years. But the thing that's really changed more recently is legislation, global action by a number of governments around the world, and the UK is a little bit behind Europe and a number of other locations that are forging ahead to ban the manufacture of internal combustion engines, as we know in the UK, that isn't particularly long away in industrial terms. And then you've got the existing uses of hydrogen that Graham already mentioned. That hydrogen is used in desulfurization in the refining sector, in ammonia production, which feeds into the fertilizer manufacture around the world, as a reducing agent in the steel sector. And at the moment, that's all grey hydrogen. It comes from steam methane reforming, as we were talking about earlier, which is a very polluting process. And in a lot of locations where this is going on, all the companies that are involved in this activity have made commitments to go to net carbon zero by 2050, and to make big efforts to do that before. So as an investor, there's a market there right now in the decarbonisation of the existing industry. So at the moment, we're producing about 70 million tons a year of hydrogen, and that's all got to become blue and green. So there's a ready market to invest into, and some of the projects that Graham mentioned are already doing that. And the green part of this sector has really become active because of the massive growth in wind and solar power, which is available around the world, and particularly in Northern Europe, where we're well positioned in the UK and in Northern Europe to utilise wind power to make green hydrogen. And that goes hand in hand with the Paris climate ambitions to achieve net carbon zero and to reverse the pollutions that we've already made. So you've got a very, very fast growing market, which is underpinned by legislation, with a large number of participants that have already been at this for years, who know what they're doing. So it's ready to invest. That's what makes the sector so interesting. And then beyond the conversion of our existing hydrogen sector, hydrogen as a carrier, as a fuel itself, is growing in itself. And if you just even look at the European Commission's plan to get to this 40 plus 40 gigawatt capacity of electrolyzers in just in Europe alone, and it's probably at least double that globally, out to 2030. You've also got a route map to see that this sector's got real legs. That if you start to project the potential revenues that all the companies that you can see producing electrolyzers, like ITM, like others, like the private companies, they're going to have to grow enormously to reach those targets, which makes the sort of initial jump in share prices a little bit shocking. But then when you look into where that has to go out to 2030, it's multiples of what we've already got. So I'm just giving you a lot of information about what makes this such an investable sector right now.
Thank you, Richard. Some questions. Tom, I had a question for you. This is perhaps slightly in the UK context, but I think it applies more widely. Even in the last week, we've seen lots of announcements around blue hydrogen in the UK. We've seen a big statement from BP in relation to a site in Hull, Saltend, a site I know quite well. And also Equinor have made statements of intent around investments into Teesside. So it seems that blue hydrogen is very much on the agenda at the moment. I was interested to know, what attracted your organisation, TCRK, to blue hydrogen, and how do you see the pathway to blue hydrogen becoming an important part of the energy mix?
Well, we're attracted to blue hydrogen because of our starting point. We're in the gas sector. If we don't develop a solution to be able to use gas, then we die. It's as simple as that. We see blue hydrogen as a key part of the transition. I think it's something that can be produced now at a price point that will drive the industries to use hydrogen. I guess that's where we would see it coming from. We see that there's, looking at the price points that the regulators are looking for to build this transition over the next 20 years, blue hydrogen sits into that. If you look at Korea, even going through the 2040, 2050, they see blue hydrogen as part of the mix. It may not be 100% of the mix, and we don't see it as 100% of the mix, but it is certainly 30% of the mix of their hydrogen matrix. If you look at the UK probably roughly the same. It won't all be green, it won't all be blue, it won't all be turquoise. It will be a mix.
Sure. And you touched on price and policy there, and this perhaps is a question for the broader group as well. What outcomes and policy interventions are you expecting? Obviously, we're seeing some work being done by BEIS in the UK, but listening to the work that you've done in Mozambique and the Middle East and possibly other territories that you're looking at, I'm interested to know what the UK can learn from other countries in this regard. What are the policy interventions that will make us or set us on the right path in terms of this being a good, growing, developing market here?
Well, I think as far as blue hydrogen is concerned, the UK has made some interventions already. That's why you've had a stream of announcements from BP, from Equinor, and the companies, as you say. Interventions in the markets that we're producing in. These are developing markets. We're not getting interventions from either local governments or the IOCs. What we're trying to do is to ensure there is a local outcome for the developing gas industry there. I think going back to a comment I made earlier, we're trying to develop this without relying on subsidies. I think one of the problems I see in the hydrogen industry at the moment is that there is a lag in adoption, a lag in development, because people are waiting for developers, the industry is waiting for governments to set a policy on subsidies or to put a price on, put a carbon pricing. So, emission reductions. Where we're coming from, for us, it's a commercial thing. We can produce hydrogen at a price that the regulators need to get to, and we can combine that with a carbon capture that is sound, and we can use that carbon. We can sequestrate that carbon. I think that would be our focus.
So can I jump in here? Would that be okay? Look, the first thing to say is that green hydrogen is the only net zero energy gas. Blue hydrogen isn't net zero. To implement blue hydrogen, you need three infrastructures. You need to maintain the use of the natural gas infrastructure, which is, of course, the reason why the oil and gas industry is so interested in blue hydrogen. You then need to build a separate hydrogen and CO2 infrastructure, and then you need to store the CO2. And you'll be storing huge amounts of CO2 for generations. And somebody's got to underwrite those CO2 stores for a very long time. You don't make any CO2 if you produce green hydrogen. You also don't absorb any oxygen from the atmosphere. You know, green hydrogen, when you split water, is the only fuel where you also co-generate the oxygen. So there are 5 blue hydrogen projects that have been funded from the UK government. They're FEED studies, they're front-end engineering design studies. All of them are going to be asking for a subsidy. They're developing the business model so that they can input to the UK government what subsidy they require. Green hydrogen has been rapidly decreasing in cost. So at 4 pence per kilowatt hour, you make green hydrogen at a similar cost to blue hydrogen. And actually, the cost of renewables is rapidly decreasing. So is the cost of electrolysis. And I think by the time any of the schemes that have been mooted are ready to be built, green hydrogen will actually be lower cost, in which case those investments may well end up being a stranded asset. So, you've seen across Europe widespread support only for green hydrogen, not for blue hydrogen. So actually the strategy being adopted in the UK, which is a dual track strategy, is actually a UK strategy right now. Look, I could see some advantages in using blue hydrogen to encourage the development of hydrogen infrastructure, but there are 3 infrastructures that are going to be used. You'll be handling 3 energy gases, and you won't have the advantage that green hydrogen has of storing renewable power and making its own oxygen.
Look, I don't necessarily agree with SMRs in the UK. I don't think it's economically viable. The reason I don't think it's economically viable is because their starting point economics is NBP or TTF, because they're taking gas from the grid. But blue is part of the transition. We're not saying it's forever or it should be over green, but it is part of the transition. And if we can, as a developer, if we can produce blue hydrogen at an economically sustainable level that drives the transition, and that's what we want. We want to drive a transition to hydrogen. If we can drive that transition, and if we can capture the carbon, and we can use that carbon in a way, I mean, this moves slightly away from hydrogen. You've got to remember, in the countries we're working in, there isn't a huge economic benefit to them normally in a gas project because the LNG is liquefied and sent overseas. We started in this project because we're trying to develop a local outcome. So if blue hydrogen is part of the mix and we can produce it economically, the next stage is, can we use this carbon to develop a local economy? Because carbon, we can use carbon to produce biofuel. So in a country like Mozambique, they import 600,000 tons of fuel every year. If we can replace some of that import with biofuel by using carbon, what's wrong with that? I don't see that as a negative. I see that as a positive. If we can produce, if we can sequestrate into carbon black or graphite, where if we have carbon black, we can produce carbon fiber. So we can use carbon fiber to replace steel. Now, steel as a product is a fairly major polluter in how it's produced. So we would see. I don't necessarily see blue as a solution for everything or everywhere, but it is a solution in the markets that we're working in, and it is part of the transition. And it's also part of the transition in the economics. And Graham, I accept completely that the price of renewables are coming down rapidly, and at a certain point in time, green will be at the right price. But green hydrogen today is not at the right price. If a lot of the talk we hear, and we're not trying to compete against green hydrogen. As I said, I don't want this to turn into an argument, green versus blue. This should be a discussion about hydrogen.
It depends what you mean by the right price. So you see widespread adoption of green hydrogen across Europe. In Europe, that's the strategy, and actually the price of green hydrogen is declining rapidly, and as I said before. But would you agree that one of the advantages of hydrogen is that you can use it as a storage medium for renewable power?
Yes, absolutely. That's a given. I'm not trying to argue that it's not a vector for the storing of energy.
So when you take into account the economics, you're not only looking at the direct price of electricity, but you're also looking at the advantage of energy storage, which has a value as well, which you need to include. It has and will have an increasing value as the amount of deployed renewables goes up, because you need more and more energy storage. But look, if you're ultimately going to use a net zero energy gas, which is green hydrogen, you're ultimately going to use it. What governments need to be doing is investing in the technology that they're ultimately going to use, so that goes down the cost curve. And it's all about, we did this with solar and we did it with wind. You invest in the technologies that you're ultimately going to use. They're more expensive in the early days, but you go down a cost reduction curve. And the oil and gas industry is very significantly larger today than the green hydrogen industry by an astonishing amount. So the fact that you need some incentive to get the cost structure equivalent is not surprising, is it?
But perhaps I could just segue a little bit into the question of supply chain. ITM Power, obviously, Graham, is a very well established and known name in this space, particularly with your cornerstone investor. If you compare, or if you look at the supply chain, particularly, well, pick any of it, offshore wind, onshore wind, and solar. The UK really did fail at the prime contractor level to build a credible proposition there. And certainly all of the work that I have done has involved German, Spanish, other contractors coming in and doing that work, or Nordic on wind. So how do you see the supply chain opportunity for the UK? And given where you're starting from, how are we going to get this right as an industrial strategy for the UK, first of all?
Yeah, I mean, it's a very good point. This isn't just an energy transition. This is it needs to be an industrial strategy as well. And you know, when you look all over the world, you're looking at green recovery plans, and actually they involve manufacturing, and they involve developing products, and they involve exporting products. So you know, from our point of view, that's very important. I mean, clearly we're a British manufacturer looking at manufacturing equipment. Most of our projects now are exports. So we are exporting of that 120 million, 124 million of backlog of projects. Much of it is actually exporting to other countries. So backing British industry as well as looking at the energy transition is very important. You know, Boris's 10-point plan goes 40 gigawatts of offshore wind, 5 gigawatts of hydrogen. Actually, I would. It's worth adding that it doesn't specify how much of that is green and how much of that is blue. But it does state in the announcement of the plan that the 10-point plan should also be about industrial regeneration, build back better, manufacturing, and levelling up. So those things have all been referenced in that 10-point plan as being important.
And you've talked about technology costs coming down, and if you look at the costs, well, certainly in onshore wind, but you know, solar even more, that there's been a dramatic reduction in frankly the cost of solar panels. And one of the things that people were a bit frightened of was, well, am I coming in too early to these things? So how do you see this supply chain, you know, pricing coming through on electrolyzers? You know, is that something that we should be frightened of? Is that something we should embrace because scale will mean that those kinds of dramatic drops are perfectly sustainable?
Yeah, I mean, we halved the cost of our electrolyzers over the last 3 years. We're looking at a 40% reduction over the next couple of years. But the point is this, that with an electrolyzer, the cost of green hydrogen is not dominated by the cost of the electrolyzer. It's dominated by the cost of the renewable power. And the biggest factor from the electrolyzer's point of view is the efficiency. You know, customers buy on the basis of price, performance, and lifetime. That's true of any technology, and you need to optimize all those three things at once. But we are driving down the cost all the time. But you're right about solar. I mean, look, the record in Portugal was just beaten. The world record was just beaten. 1.1 cents per kilowatt hour for solar. The UAE, the announcement of 1.4 cents per kilowatt hour. You can make green hydrogen using those electricity prices at a lower cost than grey hydrogen, let alone blue hydrogen. And it's all about looking at where you get lowest cost renewable power, where you get reasonably high load factors, because they're all an influence. So if you look at the Hydrogen Council's report, which published the McKinsey model, and you go to that model, you can see the cost structure of green hydrogen based on electricity prices, based on load factors, and based on the capex of the electrolyzer.
And an interesting, finally, before I move on to Richard, a client, I'd say, came in to see me, but that isn't true because of COVID. It was over Zoom. Was talking about a world where we see onshore wind farms, where instead of having all of the expensive AC and DC kit in there, you'd strip a good amount of that out, and you'd have much cheaper build, and then you'd have that DC kit. You'd link it up to an electrolyzer, and off you go with private wires, and all of that's going to be onshore. I just wondered if you had a view on that being a realistic business model, or is it not, because actually electricity generation isn't the problem right now?
Well, I mean, I'm first of all, I'm not an expert on wind power, but in all the data that we look at in terms of running the economics on the projects that we look to invest into, the economics are always more attractive through offshore, and we're also, when you just look at the global wind atlas about where are the windiest places, they're mostly offshore around the world, apart from the Middle East. Parts of Africa. I mean, really, I'd like to go back to some of the points Graham was making about, what you're talking about, the input to the economics of these projects. And when we run sensitivities on these projects, and you end up with this little tornado chart, which is, your base case NPV is in the middle. And if you increase the cost of hydrogen that you're selling, or you reduce it, or you play around with the cost of the electrolyzer, they're actually the opposite to oil and gas projects where we used to run these things. A lot of us come from the oil and gas sector. JJ and I both come from oil and gas, where it was the capex. You would be spending billions and billions up front on an oil and gas project, putting a platform out in the middle of the Arctic, drilling wells where you've only got a 30% chance of success. This is such a great sector because the risks are so low compared to that. You're talking about something that you're making from water. You're putting the electrolyzers onshore, and in some cases you can put them offshore. But really, it's what drives the economics of these projects. First of all, it's hydrogen price. What price are you selling hydrogen? And it kind of goes back to the earlier discussion about subsidies and pricing. And I think Graham mentioned it. The way that this will likely be introduced is through contracts for differences, which is the way that the renewable sector in wind and solar set itself up, 12, 15 years ago. And so that's the role of government in these things. And when you talk about going back to, I had to go back to the subsidy point again as well. There isn't a bigger subsidized sector than the oil and gas sector globally. If people just think about what they pay for a gallon of petrol in the UK compared to the US, it's different because it's subsidized more in the US. It's a hugely subsidized sector. So, and the other big thing on price about hydrogen is carbon pricing. So the two things that really drive it from an investment perspective are price of hydrogen that you're selling and carbon pricing. And it's not a big deal at the moment, carbon pricing, but when it gets introduced over the next 10 years, you want to be in a sector that doesn't have any carbon in it, and that is the hydrogen sector. So in terms of getting investors to start thinking about how do you risk manage your energy portfolio going forward over the next 10 years, you've got to have some hydrogen in there because you need to be wary about carbon pricing when it comes in. And then you're going to have an early stage input from governments on probably around contracts for differences. In Europe, they look as if they've put a lot of money aside to help on the capex subsidy of some of these projects. It's going to vary around the place, but very quickly you move to a point where all of these projects start to become economic, even though the price of hydrogen is on green is, it's between sort of, maybe $4 and $7 to make these projects work at the moment. But that's going to fall, as Graham says, but not so much because the cost of electrolysis is going down. And we're using a base case of, looking at 30% reduction over the next few years. But the load factor, e.g., how often do you run these electrolyzers, is going to improve because in the Middle East we're seeing solar projects, which obviously the load factor is but basically how often do you run the electrolyzer, and so that's in the daytime with solar. But you can supplement that with wind as well. So load factors are improving, efficiencies are improving as the technology gets better, and the cost of the green electricity is getting better. Those are the things that are really driving the economics. So whether the wind turbine is onshore or offshore, it is part of the equation in terms of the cost of electricity. But I think it's about scale. I think it's about getting very large scale wind available to produce hydrogen, because there are some scenarios that say the problem with hydrogen is there's not enough green electricity, because we've just got to carry on building these things out to make sure there's enough for direct source green electricity and the green electricity that you need for electrolysis. But that's a small problem when you look at the overall potential growth of the entire sector, which is underpinned by law and by industrial investment.
So we're at $3 per kilogram at 4 pence per kilowatt hour, and looking in the mid 2020s to 2030, mid 2020s, 100 megawatt scale plant at about $1.6 per kilogram, which is the number that is quoted regularly by Bloomberg New Energy Finance, the Hydrogen Council, and also Hydrogen Europe. So it's a lot lower than that. We announced a project with Ørsted and Siemens Gamesa about direct coupling electrolyzers to wind turbines. So to take your point about DC, so you can actually, and it's the basis of the project, connect the electrolyzer directly to the wind turbine and reduce the amount of, or rationalize the power electronics in both the electrolyzer and the offshore wind turbine. We're also integrating it with desalination equipment. You'll probably know that all or nearly every offshore oil and gas terminal has a desalination unit on it anyway. But actually desalination to derive your fresh water is a requirement for many countries. So Oyster, as the project's called, is ITM, Ørsted, Siemens Gamesa is about doing that integration.
Fantastic, thank you.
Yeah, we're seeing some very huge projects in the Middle East that are based around this desalination. And if you start to think, I think the mentality of the UAE and Saudi Arabia definitely is about how do we export our sunshine as we move into the next era. We'll be leveling off our oil production. I mean, there's still a good business in oil and gas because the world is so geared up to work on oil and gas. But there's going to be a transition, and it's already underway. So there's enough room for everybody here. But some of the big projects that we're seeing out there, and we've seen a lot of electrolysis being specified out there, is to take the sunshine from the enormous deserts and get over the problem about shipping hydrogen, which is, as we know, it has to be almost absolute zero to move it. But you can turn it into ammonia. And you can ship the ammonia. So there's a big business that we're looking at, and this is applying equally on the logistics between Australia and Korea, as we were talking about earlier, in Japan, in shifting hydrogen up from Australia and from the Middle East out into Europe and out to the US, by putting it into ammonia tankers and then turning it back into hydrogen at the other end, or using the ammonia directly. So it kind of goes back to the point about, what are we doing in the UK? Well, we're moving quite slowly here. But when you look at the investment opportunity globally, and you look at the scale of these projects, as Graham was saying, they're now around sort of 100 megawatt plus, and we're now looking at gigawatt. So what we're worried about as investors is, how do we scale up our investment capacity, and how do we plan to build further funds that bring in large-scale capital that is knocking on our door to invest into these very, very large projects. It's all been tried and tested. It's what a lot of investors still think, that this is a bit science fiction, and that it's a bit of an option. It's not an option. It's legislation in a lot of countries. It's got to happen, and that's really what's driving it.
Yeah, absolutely. I mean, I may not be an advocate of blue hydrogen, but I am an advocate of what the oil and gas industry is doing, actually they are making the transition real, and the oil and gas industry will be incredibly important in moving from natural gas to green hydrogen. There's no doubt about that, and you need that massive mobilization of capital and the oil and gas industry's understanding of how you put infrastructures together. We did a big project with Chiyoda and Mitsui Bank looking at exporting hydro. It was joint with BC Hydro, and actually exporting the energy and looking at importing it into countries like Japan and South Korea. So I agree with that as well. Looking at liquid hydrogen and also ammonia as a transport medium, very important.
Listening to the projects that you're either involved in, or all of you, or some of you, they're very, very big and vast projects, and there seems to be, an appetite perhaps for investment at lower orders of magnitude. So Richard, how do you see that? I mean, some of these initial funds, will they be looking at supply chain? Will they be looking at suppliers to supply chain? Is it consultancies? Is it, people want to get involved in investing in this opportunity? What are the ways that people can get in there?
Yes, an interesting point about how the sector has been set up to accept capital and to move assets between different parties. In the oil and gas sector, there were well-known investment banks that you would talk to almost like estate agents if you wanted to buy into a project or an asset. The hydrogen sector is very new, and it doesn't quite work like that yet. Which is why we feel like an early mover into this space in that it's literally just virtual shoe leather, talking to people, phoning people up, pushing yourself into projects. The thing we find quite interesting at this point, as we're going from sort of 5 megawatts to 100 megawatts, is for a minority investor like us into a project, we'd be looking, and it could be a blue hydrogen project as well, with perhaps there could be a carbon capture and storage, taking advantage of some of the depleted oil fields in the North Sea. That all makes sense. Those sorts of projects, we're looking to invest probably tickets of sort of 25 to sort of 50 million max. Some of the bigger infrastructure funds that will help this sector, as it goes from 100 megawatts to gigawatts, have got minimum investment sizes of 200 million. So there is a need now for fast-moving, slightly smaller funds, like the sort of funds that we'll be developing. So we're interested as a growth investor, and we've got Arup partners working for us to help us to sift through these projects, to help us to manage this early stage sort of development risk, which is a very important part of what all of the providers like ITM are doing. It's about sort of systems integration, which for a lot of investors concerned about the commoditization of the sector, that's very hard for it to happen because of the vital sort of infrastructure role that these components are taking. It's not, you cannot commoditize these sorts of projects because there's so much that goes into the engineering and the with blue and green on the sort of the systems integration, development, the risk management, which is why it's at the high end, and the barriers are quite high. But that's how we see that at the moment.
Greg, can I come back on a point to do with shipping? Sorry. And it's the crossover between blue and green. Earlier in my comments, I said there's a part of our technology development pathway. We get to a point where we're agnostic about whether it's green or whether it's blue, because wherever you're producing it, you're going to have to get it to the market that needs it. So the 2 ships that we've designed, which are going to the classification agencies at the moment, One is an LOHC, which is a liquid organic hydrogen carrier, and the other is a dehydrogenation unit. So we've looked at various ways of transporting hydrogen, and I take the point that in 10, 15 years' time, we will be transporting in liquid hydrogen form, but we're not there yet. The first ship, the first liquid hydrogen ship, is on its way to Australia to pick up a cargo at the moment. It's 1,200 cubes. This is a tiny ship. The ships that we will use in the initial stages, we will be delivering probably about 20,000 cubes, but it will be combined with ammonia. We did have a look at toluene as a carrying medium, but we've actually gone for ammonia and the dehydrogenation unit as well. So there is a crossover. Whether the ships we're designing are the ships that we will build, it will make no difference whether it's green, blue, or turquoise. Whether you're producing in Chile, whether you're producing in Australia, it still has to be got to the market. So, yes, while our background and our focus is blue, in the end, the technology that we're developing will be agnostic to the color of the hydrogen.
I just had perhaps a final question before we wrap things up. There's been a lot of discussion about the types of investment where either we're seeing large institutions like the oil and gas sector making those investments, or we're seeing equity come into this space. We haven't talked about debt at all today. Obviously, debt has been significant in terms of things like the offshore wind market, but really underpinned by contracted revenues, and that's enabled some very cheap debt, particularly project finance, to have a role. So do any of you see a role for debt? If you do, how, or is it now, or is it later? Because debt should help this transition as well. So any observations from any of you? Richard, perhaps start.
It goes back to what I just said. I think there is a big role for debt when you're scaling up from 100 megawatts to a gigawatt, e.g. 1,000 megawatts, because you need an offtake agreement in place, and that's what's slowing up some of the projects around the world at the moment. Projects are evolving in little clusters. You see clusters in the UK, you see them around the Dutch ports, you see them in parts of Australia, and they're usually working around a local steel mill or a chemicals plant or a refinery, where you can agree what the hydrogen offtake price is going to be amongst the local players. But as these clusters increase and they start to join together, then you'll start to get a hydrogen market price starting to get established, and at that point, I think you'll probably start to see large scale debt coming in. But at the moment, the debt is really going into the companies that, you can easily debt finance the building of a new factory. The thing that we're really keen to look at when we're investing into companies that are making electrolyzers and fuel cells is that they've done what ITM have done. They built their first factory. Have you got space for another 2 or 3 factories? And we can get debt into those projects to build the factories, to build the components that is ultimately underpinned by the grey hydrogen industry that's well established, turning itself blue and green. That's where a lot of the electrolysis is going. So that's sort of debt fundable, but the projects slowly but coming a bit later, I think, in terms of project finance. And our fund is mostly focused on equity.
Graham, are you preparing yourself, or is ITM taken this view already about, for example, the performance warranties that are offered on your kit? Are you debt market ready? This is the sort of areas that debt tends to focus on. Certainly we've learned that from the project finance experience on renewables.
Yeah, look, we first of all, in the after-sale support market, we are developing an important part of our business is that offering. So, we have a control room where we monitor every one of our electrolyzers in the field 24 hours a day with 2 skilled engineers, and we have a control room where you can see every pump and valve and solenoid in those. We gather data, we put that into RAMS modeling. The RAMS modeling then not only gives us the ability to do continuous improvement, but also gather data that's useful for the customer in terms of operating points and all of those good things. So we are developing a very strong business in the area of after-sales support, certainly. Warranty is part of that, and so is a continuing relationship with the customer. Debt will come into any industry. I mean, it's just a commercial decision, whether you think it's early in this industry or not. I mean, it will gradually appear, and it's an instrument that is offered all the time by customers and also by partners. So I don't see the hydrogen industry in terms of financing assets being any different from any other industry.
And Tom, just concluding with you, I have a sense that whatever the color of hydrogen, when you're talking with debt and other investors, that one must spend an awful lot of education time with people coming in or trying to get people in. Is that how a lot of your day spent?
Most of my day is spent, yes, and it's actually it's convincing partners, because look, debt will follow the market. That as Graham said, if we want to build a ship for $200 million and we have a 10-year offtake contract, finding debt for that is not going to be the problem. The stage we're at is convincing people in the market that we have partnerships with already, that the next stage is hydrogen. So together we will finance the prototype ships. We're not quite at the stage yet that we would go to the general debt market looking for debt, but I don't see that as a gating factor, because debt will follow market.
Great. Well, we're just about at time. So Richard, Graham, Tom, thank you very much for your time today. It's been an enjoyable and thought-provoking discussion. And the opportunity is massive for sure. And I'm really looking forward to seeing how this market develops, and it's going to develop at pace, that's for sure. Thank you, everyone.
Thank you.
Thank you.